Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Monday, the 19th of December 2016, the last week before the Christmas holiday. Hope you had a restful weekend. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Just a quick rundown of what we're looking at for this week and what has occurred overnight. China's housing market has slowed down, is showing some signs of slowing down. New home prices in China rose 0.6 month on month, down from 1.1%. China's had a bubble in its housing market. Japan's trade surplus narrows, and Germany got its IFO number this morning. Germany's December IFO Business Climate Index came in at 111 versus 110.6. This is the highest since February of 2014. Other than that, let's take a quick look at what is expected for this week since it's Monday. Today we have services PMI 15 minutes after the open. It comes out at 9:45. More importantly, today we get comments from Fed Chair Yellen. Fed Chair Yellen is expected at 1:30 Eastern. 1:30 Eastern. She's speaking at the University of Baltimore commencement. So it's probably not going to be anything to do with the economy since it is a commencement speech. Probably going to be pre-releasing that speech anyway. Other than that, for the week, what do we have? The key day this week is going to be Thursday. We went over today. Tomorrow we get German PPI year on year and the European current account. There's nothing for the U.S. Wednesday, we get MBA mortgage applications, existing home sales at 10 Eastern on Wednesday, existing home sales for November. Eurozone consumer confidence, and then we get crude oil inventories on Wednesday. Thursdays when we get core PCE, personal consumption, GDP annualized, GDP price index, durable goods ex transports, and initial jobless claims, all at 7:30 Central, 8:30 Eastern on Thursday. That's going to be the busy day of this week. And then at 9 Eastern, we get FHFA house price index month on month. At 10 on Thursday, we get personal income, personal spending, leading index, PCE core month on month, PCE deflator month on month, year on year, PCE core. And then we get natural gas at 10:30 and Kansas City Fed at 11. So you can see that Thursday's fairly well packed. And then Friday, the day before the holiday here, remember Friday, the calendar is going to be a little bit different for different exchanges. Friday, the U.S. is open, and we're getting a UK GDP, UK current account in the U.S. overnight session. But Friday morning at 10 a.m., we get new home sales and University of Michigan confidence final. And that ends the week. We go into the Christmas weekend, and then I believe Monday is a holiday. The following Monday, next Monday is a holiday, and then we have a shortened week. So that's how things are shaping up right now. As far as what we expected on Friday versus what we got, a quick review. Friday's expectation was for a drop early into the point of control 22.57 and a quarter, and then finding buyers down there and then rotating up, but still remaining within the range of Thursday, which is in the range of Wednesday's FOMC release. That's what was expected. That did not happen. Hypo 2 was expected to push higher, then go completely sideways, stay in range and in value. So push higher early. Push higher early, and then just stay in range, which is basically what happened on Friday, except it had a downward skew. So this is what things looked like on Friday. We opened higher than where I expected, but we ended up pushing down to the point of control. So this looked like hypo one, shooting for hypo one, looking for a rotation higher. We got that, but then a very, very clear indication that sellers stepped in up here at 22.62 when we suddenly got a 6.5 point rotation down. The expectation is for a continuation rotation, which we got with a very poor pullback. So we ended up pushing out of value, but still we remained inside of Thursday's range as expected. So instead of pushing up, pulling back, and going sideways for hypo 2, we essentially pushed down and then went sideways. It's kind of an inverse hypo 2. So not much to do with it here on Friday. It was it was a good trade for scalping, fairly choppy trade otherwise. So that's what we got on Friday. Now oops, looking at the week, hang on, sorry about that. There we go. Looking at the week, what did we accomplish for the week? We essentially balanced on top of the rally we had the prior week. So this past week didn't accomplish much other than to balance. The key things to take away from last week: here's the close of the prior week. Here's the close of last week. Uh, the close of last week was just 1.4 ticks above the prior week. The point of control is exactly in line with the prior week's close. The market tested up, started the week by testing up, and as the week progressed, it started to move down, shifting the point of control down with it. To me, this is saying that it has exhausted itself, it is balancing, and it's likely to continue to rotate lower um, over the next week, unless this week builds a strong point of control down here and starts to move away from it to the upside. I would expect that the market will continue to explore this thin end of the profile. That's what things look like right now. On the daily, so since we popped up, since we broke away from our prior balance right at the election, so here we are. We finished the election back here. This is the election day right here. This is the day after. But during that time, we are still trading inside of this balance zone here. And then we broke out. And since we broke out, we haven't done very much other than to push to a point, push to about 2260, 2280, and we have gone sideways, and we're forming this triangle up here, and we've been holding steady. So you can see the volume is heavy up top with very little underneath it, and that's why my hypothesis in the intermediate term is to break lower, to start testing, break lower, and to start moving back down into the 2207, 2209 area. That's really the bigger target in the intermediate range. As far as what we did overnight, not much accomplished. A lot of trading in the middle. You could see that volume is very, very low. In last night's session, 79,000 contracts. That is it. That is that's almost a third of what is expected. If you look at Friday's, Thursday to Friday, it's 188. Last night, just 80,000. So it's about a half to a third of where it should be. There's very little participation. The expectation here is we're likely to get choppy today. We didn't accomplish much since Friday's close. We pushed up a little bit and are drifting lower. So you can see the market is creating a channel lower into Friday's close. I'm expecting it to revisit that 22.55 and a quarter on the open. Finally, a quick show of what has happened since last week. So if we look at the bigger picture here, if you watch this profile here as it forms, If you watch that profile, you'll see what we accomplished last week. So as we move forward, here's Monday. You can see Monday building the profile a little bit higher, and then we break out we break out strong on Tuesday. We have an open drive on Tuesday. We push prices up, and then we start to build volume higher. But watch how the volume, even though it's building higher, the volume is stuck in that 2266 area. So you can see the volume is just forming and forming and forming until we drop. But most of the volume, most of what we built last week is right in that 2266 area. So we are filling in this area here. There's no consensus. You can see how blunt it is. There's no, we're not getting a nice concentration of volume. We're getting flat volume, and there's no consensus here. So there's still a battle between the buyers and sellers up here, and that's why we got to wait. We have to wait this week to find out how how this range breaks. Of course, the ideal situation, not that I'm a perma bear or anything, but the ideal situation for day traders would be for a break lower, giving us a pullback, and then continuation lower down to 2209. That would be the quickest yielding profit yielding opportunity out there. But we're in a rally market. It does look tired from a an auction perspective. It does look fairly tired, and that's why I'm looking for that opportunity to get short. But if it continues higher, if it pushes through the 68, 69 area, then we're likely to push through and get up into the 78.50, which is this measured move target right up here. Okay. As far as what we're expecting today, just to wrap this up, this morning we're trading at 22 in the 2257 and a quarter, 2257.50 area. The expectation this morning is again to test higher, push down, and then break that overnight low and test the 2252 again. And then I'm expecting it to just sit sideways for the rest of the session. Mondays are not the highest range day or the highest volatility day. I'm not expecting too much today. I'm looking for about 7 points of range. 7 points, that's it. We're normally at 10 to 12. So I'm expecting a lot of compression today. That's the primary hypothesis, is to test up, test down, get down into the point of control, Friday's point of control, and just rest. The alternative is to test lower early, get buyers to step in, and then start to push up through the overnight high. The overnight high and the overnight low are very tight, and then to push into the 65, that's hypo 2. And then hypo 3 would be the ideal situation where the market tests higher, finds its sellers near the overnight high, pushes lower into the point of control, and then starts to drift down into last week's low of 2243. That's hypo 3. That's the situation that again yields the quickest return for the risk that we take as day traders. Okay, so that's all I have for you. The only other thing I need to kind of reconcile here is that last Tuesday's webinar was supposed to be released Friday or this weekend. I have been completely slammed. I have not gotten a chance to edit it and release it so that it makes sense to you in order to execute off of order flow. There's some good pointers in there, some real, I believe, are really proprietary insider type tips in there that I think folks who use a product like S5 Bookmap can use, or whatever order flow software you use. Um, and I think it would be useful for initiating trades, whether you scalp or day trade or whatever. As long as you're interacting with the market, you should be able to pull something out of it. I'll look to get it done today, but again, my time is really compressed right now. But I'll do my best to get it out. Anyway, I'll catch you tomorrow morning. Good luck, and thanks for listening in. Take care.